in Nigeria is about $1 billion, of which 70% is in the financial market sector, both banks and non-bank financial institutions, like insurance companies and then also microfinance institutions. And the rest of it is, between the telecom sector and then also services like hotels, schools, and hospitals. Yes.
There's a lot of concern around the impact of the terrorist attacks we're seeing in the north on FDIs into Nigeria. I mean, clearly you're investing in Nigeria.
Yes.
To what extent is this impacting your decisions right now?
The security issues in Nigeria are issues that, have to be taken seriously, both in terms of national interest, but also it's really a discouragement to not only foreign investment, but local investment as well, equally. We are concerned about the increased security issues. It's also precluded us from, geographically diversifying our investments in Nigeria. But with our presence on the ground and with relationships we have with strategic partners like Diamond, at least we're able to understand where are some of the continuing opportunities, so we remain committed to investing in Nigeria.
I imagine obviously tracking developments in the north very closely. But now let's speak about this deal, Diamond Bank. Clearly you are making available $70 million to Diamond Bank. For me, it speaks to dollar funding in the Nigerian market, right? And I want to get your thoughts on that. To what extent would you say dollar funding is the way to go for corporate? Because it has become a discussion point given the high interest rates we're seeing in the local debt markets.
Asset liability matching and also currency matching is always good business, which is if you have dollar-based business, then you can borrow dollars to then on-lend to the dollar-based businesses. But one of the things you don't really want to do over a long period of time is borrow dollars and lend that to companies that are generating their revenues primarily in Naira, and their pricing is not indexed to Naira-dollar exchange. If you talk to Alex would tell you that, he is going to focus on really that currency matching, and he's not going to take, exposure beyond what's prudent to match what his business needs are.
All right.
Yeah.
Okay, I know IFC was also planning local bond, a local Naira-denominated bond. Can you just speak to that and give us an update on where that deal is? Because there is a concern, again, because of the high interest rate environment, that possible lending, especially long-term debt lending to corporates in Nigeria, are being squeezed out right now.
Okay, so I can't really comment on whether it's right or wrong that interest rates are this high. The CBN and the other regulators could say that it's inflation management, okay? However, the impact, today is that the benchmark rates are quite high. So it's going to be difficult for IFC to actually issue a Naira bond and be able to get the funding at reasonable rates that we can then on-lend to the Nigerian companies that we're investing in. Increasingly, we're doing more investments in agriculture, healthcare, education, and these are businesses that generate their revenues primarily in Naira, and they're not necessarily going to have prices indexed and changing with currency exchange rates. So over the long term, and we're taking a long-term approach, we want to be able to issue bonds in Nigeria as IFC to then use those funds to really fund, Nigerian companies, both medium-sized, organizations and also corporate organizations. The potential to channel long-term Naira deposits from the pension funds and the insurance funds will begin to complement what the banking sector should do. We have huge expectations of the banking sector, but if you go to a lot of developed markets, you see that debt capital market solutions are also a key part of really the financial intermediation.